Hey, Gary's Gulch, welcome back. Many of you have been reaching out asking what happened to Gary's Gulch podcast. Don't worry, nothing happened to it. I just had my birthday, took some time off with some friends, hung out with family, had a great time. I also had a trip down to Nashville, Tennessee with Patrick Donahoe, my business partner, so that we could go to a conference called the Exit Planning Institute conference, which supports the certification I recently got that is called CEPA, or Certified Exit Planning Advisor. It was fantastic. First of all, you're in Nashville, Tennessee, which is always pretty cool, hanging out with a really good friend. And there were 1,200 people at this event. It's been quite a while since I've been in an event that had that many attendees, that many booths. It was like a car show. It was massive. But I learned a tremendous amount, and I think it can assist me in helping many more clients. Gary's Gulch, what's this one about? I was introduced to Matthew Efird, who Matthew is running a podcast. He's a pastor. He's running several businesses. He's a man of action. I was introduced to him by Aaron Chapman, another incredible man of action and man of his faith. And he said, Matthew is a really good fit for your audience. And so I was just recently on his podcast. This is a replay of that. His podcast is called Pillars of Purpose, Market Mavericks. And he describes it or explains that his audience are small business owners, solopreneurs, and wantapreneurs. He calls a wantapreneur a member of the American employees that is wanting to start a business that doesn't quite know how to do it. That was me one day. And he said that his listeners are working to live a life of purpose, becoming better leaders, running better businesses, and serving people better. Sounded intriguing to me. I was just recently on his podcast, and this is the replay of that. It was fantastic. I'm having him come on my podcast because Matthew has a personal story that will rip at your heartstrings. It will inspire you to get up out of your seat and do something more amazing than you thought was possible. He's a truly inspiring individual, and he's going to be on my podcast coming up here very soon, maybe even the next episode. So enjoy this while I travel out to Salt Lake City and do 4 days in what we call truth training put on by Todd Langford, the owner of Truth Concepts, husband of Kim Butler. You've heard me talk about Todd and Kim. There are two legs of the three-legged stool with Patrick Donahoe, running an incredible support organization for advisors who believe in whole life insurance and fundamental traditional ways of growing lasting wealth for you, your families, adding agency to everything, and just living a more inspired life. So until I get back from that incredible training and helping facilitate it, as well as just learning and practicing and gaining my mastery, when I get back from that, we'll have another couple of episodes coming up here in very short order. I've got a couple of them stacked up. Can't wait to get back and rolling into things. And thank you for your patience in getting Gary's Gulch through my short little sabbatical. And now I'm back up and running. Thanks again. And until next time, make something amazing happen in Gary's Gulch. My name is Gary Pinkerton. I just had my 57th birthday. I grew up in the Midwest. I spent 30 years in nuclear submarines after growing up on a dairy farm in the 70s and 80s. Really tough environment, very high interest rates. Inflation was crazy. It just seemed like we as farmers couldn't make ends meet. Ended up losing the farm, learned about small business, putting food on the table in high school. Decided I wanted a safe, secure W-2 job, went off to the military. Incredible experience.
Thank you for your service.
Thanks. I appreciate that very much. Love to talk about submarine life if you want to talk about that. Today in business, I'm in financial services. I'm focusing on helping business owners and real estate investors, anybody interested in growing agency in their own family finances, as well as taking control of their future, not just being super passive in the markets kind of thing. So that's what I do. I help people across the country, across the world, and run a bunch of real estate and a couple businesses myself.
Wow. Good. That's fantastic. So let's start with the military, if you don't mind.
Sure.
You're in the Midwest, dairy farmer, and at what point did you enter the military? Was that at 18? Was that after high school? When did you get in there?
Yeah, right after high school. I graduated. So I went to the U.S. Naval Academy, which is a college of sorts, and they paid for everything and gave us a salary, which was exactly what I needed at the time. I had no money to go to college. Cool. I did get accepted pretty much full ride to my University of Illinois local college, and then also the Air Force Academy. So everything was free. So I really just had to choose whether I wanted to serve in the military or not. I was drawn towards that guaranteed paycheck growing up extremely poor. And so I just really wanted to do that. And I had always been in service organizations. So I jumped in right after high school, probably 2 weeks after graduating. We were off doing push-ups.
Wow. Okay. And so tell me just briefly your career there. You're there for a long time. What did
Yeah.
that look like?
Normally in the Navy, we're a service that has dealt with deployments our entire history. Unlike the Army that would go off to nonstop at war for a period of time and then be done with that for a while, we were constantly on deploying experience. And that's good and bad. The strategy in the Navy, or the process, or what should I say, like the life cycle of your career in the Navy, is that you're on a ship pretty intense for 2 to 3 years, and then you're off for a couple of years to re-engage with family, get a degree, maybe just get caught back up and rejuvenated, and then go back out on another ship. So I was on 4 nuclear submarines. My second one was a missile submarine, ballistic missile submarine. And then I eventually commanded the USS Tucson in Pearl Harbor, Hawaii, about 20 years into my career.
Wow. Okay. And so did you do that your last 10 years of your career there?
No, actually, I finished up, it was about 6 years before I was finished. And then I went to the U.S. Naval Academy and worked on the senior staff there. Then I went to the Pentagon for 2 years on the Chairman of Joint Chiefs staff. And then back for one twilight year at the Naval Academy recruiting submariners for the Navy Nuclear Submarine Force.
Wow. Okay. So you take that incredible experience, and how do you leverage that into your career now?
Maybe another way is, how in the world did you end up here? Yeah. My life, probably most people's lives, is really just a series of events. Some of them are thrown out in front of you and you pivot. Sometimes they're just like stepping stones in the direction you thought you were going to go. I would say that when I was in high school, I did not think I was joining the military. And when I was in the military, I did not think I was going to go into life insurance and financial services. So my life has really been a series of roadblock in front of me I did not anticipate, go around it, over it, grow from it. I used to think they were just obstacles and life just was hard. What I realized is that they were the glass ceilings I was hitting up against, and it was time for me to leap through that glass ceiling into a new world.
Okay.
And so the one specifically you asked about, so if you remember, I was focused on being monetarily not poor. And so I had 2 young boys. I was getting ready to command my submarine. And over those 20 years of dragging my wife and kids around all over the world, I started to realize that the one thing I had as a kid on a farm was definitely not money, but it was legacy. It was having time around my father and him putting so many important things inside me that was a huge part of my success. Yet I was doing the exact opposite of my boys. I was putting fuel in their hands, money, in the future with no guidance, no time around their dad. And so it was really working complete pendulum swing in the opposite direction. Realized I wanted to fix that, wanted to spend time around my boys. I had amassed enough money that I thought that I would be okay with a small pension, and I was going to leave right after command of the submarine. What happens is that I had command of the submarine during the Great Recession. Like at the very beginning of the Great Recession, I started it, I finished at the end. Wow. Frankly, I did not know that I had lost half of my family's wealth. No emails, phone calls, letters. No one stopped by and said, hey, this isn't going well, but we got your back. We're taking care of you and your family. None of that stuff happened. And so when I started asking questions, I got unsatisfying responses. What do you mean? It was the Great Recession. Everybody lost money. You're in it for the long haul, dollar cost averaging, all those things. But I wanted the money right at that moment because of something important to spend time around my kids. And so I had this experience that a lot of retirees have when they are planning to retire right before a recession or something. Like somebody who was retiring in COVID when the markets all tanked, they didn't retire. Right? They realized, ooh, things have changed. So I did the same thing. I'm only in early 40s. It's not like I'm quitting working in this world, but I wanted to spend time around my kids, and I don't feel like I can do that. So it really made me mad, and the responses from the people who were supposed to be shepherding my money was not satisfying. So I figured out, okay, I've been successful with taking care of my professional career by being involved in it. So I realized the impact of having control over that and having some influence on the results of that. And then I started looking around at business owners and real estate investors, and I just kept seeing that repeated thing. Like Henry Ford was not successful because he hired some dude to run his company and went fishing, right? Like he was 100% involved. Elon Musk, like any really successful person, they're 100% involved. Donald Trump, like him or hate him, the man works like crazy. And so I realized if I wanted to be successful, I want to have control over the results, I have to be involved in those results. And I met another amazing guy named Aaron Chapman who acts just like that. One of my favorite phrases of Aaron is he's like, hey, if you got coming to my funeral you better stand aside because I'm coming in hot. Like he's gonna, the pencil's gonna fall out of my hand when it's the last moment. So I love that aspect about people, and I want to be surrounded by those kind of people. But specifically, the reason I ended up in financial services is because I wanted to find out why did I lose my money and how do people who have been successful not do that.
Okay. So incredible question, and kudos for you. A lot of people take that as a victim and they say, woe is me, they complain. But instead you said, no, I'm going to roll my sleeves up, I'm going to get involved. When you got involved, what did you find out?
Really, what I just said there is that so one of the things I recognized and admitted, looking in the mirror, is that we are all animals. And so we are from the animal kingdom. And so there are things like self-preservation. And there are amazing beasts out there called moms in most species, where the mom will take care of the young and even beyond her own protection. But most animals out there, if it's not their young that's at risk, they're pretty much trying to save their own skin at some point. And I have lost my shirt in the markets, even worse in some things called like alternative investments or syndications. But the bottom line is that when you hand your money to another person, you take on tremendous amounts of risk. I wish that weren't true, but you handed your money to an animal. And there is some point that animal will fight for you. And then when it gets bad enough, they will grab everything and run. And so sometimes they're just evil and they started off wanting to take your money. But most of the time I have found that's not true. But what I have found is that everyone will work for them, their family, and ultimately themselves harder than they will work for other people. Okay. And so it is my goal to help individuals understand that you can do this. And the most successful and dependable way to have agency for your family and to teach your kids and grandkids the way to be financially successful and therefore fully successful in life is to be willing to, like you said, roll up your sleeves, understand some basic financial things, and recognize that, for example, the U.S. tax code is written to support business owners. Real estate investors somewhat, but business owners have all of the advantages. And it's that way intentionally because it's what America was built on and it's how we sustain America.
Yeah. It helps drive innovation. Yeah. It helps create more jobs, more tax revenue, more tax basis, all the things. When you say that successful people do something specifically, they take ownership, what does that look like?
If it is to be, it is up to me, right? That old phrase. Okay. And so I want people to understand, like, that's not a negative thing. That's a very inspirational, positive thing. So if it is up to me, then what do I need to know and do to be successful there? I need to surround myself with experts in specific areas, and I need to be a bit of a generalist to be able to run my company. I need to understand things about leadership. I definitely need to understand the tax code. So many people will say, my CPA said I made more money or less money, and I had to pay some, and I don't really know why that is. A guy that I follow a lot, Tom Wheelwright, a CPA, he's Robert Kiyosaki's CPA, he's a wonderful, very smart guy. He has a phrase that if you want to change your taxes, if you want to change your tax, you have to change your facts. And you can only change the facts, like how you live your life financially. You can only do that if you understand the impact of what you're doing. So I'm not saying go get a certified accountant degree. I'm just saying you need to understand some basic things and have somebody in your court you can ask the detailed questions to who has actually studied all that stuff. Okay. So you need to surround yourself with some right people. But the first thing is to take ownership for your financial future.
Okay. And what does that look like?
Taking ownership?
Yeah.
It's gaining whatever amount of education is necessary for you to have the confidence to be able to look in the mirror and say, that is the thing that I need to focus on. I was just at a business owner conference for a specific industry. One of my clients actually is running this kind of mastermind for people younger or newer in the industry than they are. And there's this, near the end, they did this whole pitch on like trying to add value on financial things. Now, they're not financial professionals, they're business owners. And so it was a little bit risky for them to even be up there doing it, but they were super excited about it. They just wanted to add to their community. And some of the stuff they said applied in certain situations, but definitely not for everybody in the room. But the biggest takeaway I had was, why are we telling these business owners to bet on something else? Elon Musk does not do that. He does not say, you know what, those guys over there, I don't know, Virgin Atlantic or whatever the Amazon space race group is. I forgot the name of them, but
Blue Origin.
Blue Origin, yeah. So he doesn't look at them and go, that's interesting. I think I'll toss a little money that way. He doesn't do that. He bets 100% on him and goes all in. And every super successful, uber successful person has done that. They put the work in themselves. And why do they do that? Is it because they just woke up one day and realized they're the smartest person on the planet? No, I don't think that's it. I think it's because they've realized what I realized, which is there's one thing you can control in this world, and that is your own work ethic, response to situations that come up. Like, you can control yourself. You can't control your kids, can't control your spouse even, but you can control you. And so I think that's where you start. That's what it looks like.
I love that. So when you are working with a family, what are some steps that you typically take them through to get
Yeah.
them in this mindset and then beyond this, having the mindset and implementing it?
Yeah, so I just want to make sure that we're a good fit. And so the first thing I do is I just go through a little bit of what's important to them financially, where are they today? And then if I realize we are a good fit, meaning that the person or the family believes in themselves, they believe in the business that they have, and they want to grow it so they can share more at a bigger scale to the people out in the world. And they care about teaching stuff to the people who go beyond them. Maybe not even their own kids if they're not on that path, but maybe their employees or something. So if there's this family or this individual is interested in growing and they're interested in paying it forward, then I'm interested in spending some of the days that I have left helping them do that. Because in the end, it's about preserving the freedoms that this country created 250 years ago. That freedom is really preserved when the people are producing so much and the government's dependent on the people that the government doesn't try to control the people. They're like, okay, this is where our bread and butter is coming from. So they've elected me. They're producing all the value. I'm going to listen to them. So that's how we started. And that's what I want to promote and keep going. So what it looks like is I find out about their situation and then make some suggestions that sometimes you have to help right the ship. Maybe they have some big credit card debt, or they're going down some path that's really devastating tax-wise, or they're putting their company seriously at risk because maybe they have no liquidity or something like that. Or maybe the family they have no health insurance or something like that, or no life insurance. So just helping maybe right the situation, get a nice solid foundation built underneath it, which typically looks really boring, protecting the important things and having a liquidity savings account. So then from there we'll build. And building from there, if I can, I help them maintain as much possible control as they can over their investments when they put their money to work out there in the world. Always trying to push them to bet on themselves. But if they're at a point where sometimes I have a surgeon, right? A surgeon's working 60 hours a week. He doesn't know anything about anything but his own business, and he doesn't want to buy a surgery center. And so how can I help him mitigate the risk as much as possible, but understanding that he's sending his money off to summer camp, so to speak, right? He's not personally going to be buying stuff.
Yeah. So when you are working with somebody, what makes the difference between somebody that does this well and does it really poorly?
Somebody who does it well has tremendous confidence in themselves. And so therefore they will shield themselves from the fear of missing out, the FOMO. And FOMO is what takes most people off track. They will have a conversation. I'll say, do you believe in your business? Do you want to bet on your business? You should bet on your business. But then 6 months later, we're talking. You're like, oh, my buddy told me about this incredible investment. And I sent all my money over there. And that's not betting on yourself, right? It's the opposite of betting on yourself. It's putting your business at risk because you have no liquidity anymore and you just bet on somebody else. Yeah. And so the reason they did that is because they were sitting there at lunch or dinner and their buddy's talking about the amount of money he made in that thing. And it feels like you're missing out. And that all just comes down to fundamentally it is, hey, I didn't believe as much in myself as I did in the chance that somebody else out there who's a professional can make my money grow faster.
Yeah. Okay. So it's the commitment of come hell or high water, this is the way I'm going.
Yeah. I mean, there's certainly times where you bail if it's really bad, but having the fortitude to bail from that to something else that is you and you're still dependent on yourself. So maybe you have to shift businesses or something. I'm not saying flying into the desert, into the ground.
Sure. Yeah.
It's not a good one, but betting on you is the thing you need to follow into the desert, no matter what.
I love that. Building up the flywheel principle, right? We're going to keep pushing this and it's going to start spinning off. I love that. Yeah. Okay. So tell us about the family bank.
Yeah.
We've heard that term before. Yeah. People may be familiar with that, maybe not. What does that mean?
So this is where Aaron Chapman says I'm the worst salesman on the planet because I try to dumb things down and not make them unnecessarily sexy. Because you can make this thing complex by snapping your fingers and saying a couple phrases. Because it has actuarial science and everything in the background. But the family bank it's titled family banking because the idea is that you are storing the liquidity in a place where you have 100% control over it. No one can say, no, you can't borrow for that purpose. And so you have full control that you can go use it for something that you as the number one asset have determined are going to better your agency for your family. So we use whole life insurance for that, but frankly, you could use a shoebox or a sock drawer if you wanted to. It's simply just storing money in a location where when you call them up, they don't say no. I don't know if your listeners have ever experienced a bank who has your money saying no, you can't access it. I've done that, and that is really sobering. the great Nelson Nash, who came up with infinite banking concept. He called it infinite banking concept in 2000. The reason he did that is because he almost lost his shirt, and the banks had decided that the economy didn't look good. The storm clouds are rolling in, and they won't give him access to his own money. That really polarized him against banks. I haven't gone that far. I use banks all the time, but I never make the mistake of thinking that it's a done deal, that even though I have this home equity line of credit for $200K, that it's going to be there when COVID is happening and banks aren't lending to anybody.
Sure.
And so there's plenty of examples where they will say no. And so how do you prevent that from derailing everything you're doing? You got to have some yourself. And so we store it in whole life insurance, because whole life insurance is guaranteed to never lose a penny and go up every day and be there to age 121, and premiums can never go up on you as you get older. And you have 100% access to the cash, whatever cash value is there.
Okay.
So we just simply use that. It's got some tax advantages, but that's why. And then so you store your capital there. And just like borrowing against your primary residence with a HELOC, you can borrow against this policy. The cash value sitting in that is technically just collateral. You didn't physically borrow it out. And as a result, it's growing and compounding in a tax-free internal environment while you borrow against it and go use it. So again, you could do this with a shoebox. It's not really the tool. The tool is just a really efficient one. But the concept is that you put liquidity in a place where you control it so that you know it's there when you need it.
I love that. What a fascinating way, because then, so tell us about the legacy piece, right?
Sure.
Then it's getting our extended family, like the next generation in. Can you give us that?
Yeah. So it's funny, when somebody gets really excited about using this during their lifetime, they'll carry it to an extreme and they'll say, I love this thing. And I love that the IRS has given us this tax treatment that's incredible. It's like really a Roth is about the only kind of an account that would have similar tax treatment to this. And meaning that you can grow the money without ever paying tax on it and then pass it on without paying tax, getting to the part of the question you asked. So I love that. But then as they're thinking about using it during their lifetime, they'll be like, yeah, the thing that's slowing it down a little bit is that life insurance. I wonder if we can do this without the life insurance. So they're trying to mitigate the life insurance, right? But in the end, what the Rockefellers and many other families have taught us for generations is that exactly what you said, Matthew, is that you use it during your lifetime, but every dollar you're putting in is buying $3 to $5 of paid up whole life insurance out into the future. Not only is the cash available, but it's buying this paid up life insurance that was guaranteed to be there. And then let's say you could die next year and have $100,000 borrowed against $1 million policy. Your family gets the million minus the 100 that you didn't repay, $900,000 tax-free. Okay, that's not likely to happen there. But what is more likely is that 40 years from now, you die and it's got $2 million of death benefit and $1 million of cash value. And so now there's another $1 million, right? So you use it during your lifetime without paying tax and it passes on. And one of a good friend of mine, very close friend, wrote a book called What Would the Rockefellers Do? And in that book, he talks about the Rockefeller family, John D. Rockefeller, setting up trusts and this family banking concept where every time a child is born, they put a life insurance policy on the child. And then when the child gets to adulthood, there's a very seasoned policy that they can borrow against. And if they treat it correctly, borrow and repay and use it for productive things, then they're kept in the will, if you will. But if they screw that up, they don't get to borrow anymore. And then when they pass away someday, it replenishes what they didn't repay and the family moves on. And so it's a way to insulate the family from that spendthrift trust issue that comes up for many families.
Wow, that's fascinating. And so it makes sense around the life insurance side, why it's the whole life. So when somebody hears that and they say, I've got life insurance, but they've got a term policy, give us some insight as to why you're looking at a different type of policy.
Yeah, so most people understand, obviously we all live inside a house, or I hope we do. And so there's two ways to live inside a house, right? Once you leave your parents, there's renting and there is owning, right? And a lot of people, you'll hear every time you go to Thanksgiving, Christmas, you talk to one of your aunts and uncles, they're always beating on you, right? You need to own your home one day if you really want to grow some wealth and have a retirement someday. But most of us start off renting. And I would never belittle renting. I've rented, and renting beats sleeping outside every day, right? Like, it's a pretty cool thing. I don't like giving all my money to the landlord, but renting is not bad, but there's no mechanism there to grow your own wealth. Here's what happens though when you finally take their advice and you go from renting to owning. The payment's bigger, you have to go fix everything, you have to pay for the insurance and all this kind of stuff now, and there's no one else to blame when something goes wrong, right? So that seems like a pain. Why are we doing this? Why am I paying more for the same thing with a lot more headaches? Because we've learned, And we've accepted the fact and looked at the math that we're actually, the payment's bigger, but it's because we're putting money in our own pocket. There's a savings and equity part of this. And so if you just shift from something we're very familiar with, which is the place we sleep every night, renting and buying that, and you shift that over to life insurance, it's the exact same thing. So if you think about life insurance and your primary residence, tax-wise, efficiency-wise, and then across the globe, growing wealth over time, they're very similar. And so renting your life insurance is term insurance. It is far better. Like I see a young family and they're like, oh, I want to try out this infinite banking thing. I think I'm going to put $500 a month into it, but they have no term insurance at all. They have no life insurance and they have 2 little kids. I'm like, no, the first thing we need to do is build an emergency fund separately in a savings account and get some term insurance in place to protect your family. And then we'll convert and put those 2 together as a family bank someday in the near future. And you can always turn that term into whole life. So there's things you can do. But renting your life insurance is far better than having no life insurance on your family. It's also, though, unlike your house, renting in your 70s and 80s is not reasonable when it comes to life insurance. It gets super expensive. And so if you do want life insurance in place when you die of old age, you've got to convert that thing over to whole life, right? Or permanent. Okay, so term insurance and then whole life insurance. And there's this hybrid thing called universal life insurance. It does not have the important guarantees, and it has term insurance underneath it, so it starts blowing up in your 70s and 80s. And so we don't use that because we're trying to make this a guaranteed replacement for a savings account. It has to be guaranteed. So universal life, it's fine as an investment if you want to do an investment hybrid thing. But let's just go back to the 2 basics, like term and whole life. So term insurance premiums are lower because all you're doing is paying for the risk every year, right?
Sure.
Whole life insurance, at least before you're in your 70s, the premiums are higher than they are for term. The reason is because there's a savings component. And this is why you can use this thing for family banking, because you're actually putting equity inside it, just like you do when you own your house. You can't rent your neighbor's house and then go try to get a HELOC against it, right? Because the equity is not yours.
Sure.
But if it's yours, you can access that equity. So exact same thing with life insurance. There's a point in time where I have term insurance. Until last year, I had term insurance. My wife still does. We convert them over time when our cash flow supports it. But we make sure we're insured to our full value, just like we insure our cars and homes to its full value. And so sometimes that's a combination of term and whole life.
Okay. And when you look at it from like a question that I've had asked when this conversation's come up is the bank, it feels safe.
Yeah.
It feels FDIC, at least I can get $250,000 out of whatever's in my account. I'm at least covered for that. On the whole life side, what is that? What does the guarantee look like? What does the safety look like for somebody who's starting this up and going?
Yeah, great question. You've personally looked into this, which is pretty awesome. I like it. So, the crazy history of it, let's not talk about the history. Let's talk about the actual guarantee right now. So there are a few. So the insurance company is rated by 5 different agencies. And so you can just look at how strong is that company, much easier than you can really with banks. And insurance companies, whole life insurance, mutual companies, their job is to pay out death benefit, obviously. In the term insurance, it's a bit more of a math game. What percentage are we actually have to pay out, and we need to retain that much money. But whole life insurance is a different game. They fully 100% expect they're going to have to pay out all of the death benefit, and it might all be this year. So they're nearly 100% liquid against their liability, which is pay out all the death benefits. Very liquid companies. And so just their assets alone make it really improbable that any of these companies would get into trouble. And if you look now at the history, let's finish that part. So there's also a thing called a state guarantee association. So one of the unique and wonderful things about life insurance is that from the 1940s, when they had a Supreme Court case, the states fighting against the federal government, the states wanted to hold on to, and the insurance companies wanted the states to hold on to control over insurance. And they succeeded. And so life insurance has and always hopefully will be controlled by states, which means that it moves very slowly and it's much more grounded in what the people specifically want. It has not become the Congress's piggy bank like the retirement accounts have.
Sure.
Very well grounded, but it's got a state guarantee association, which is essentially the same as FDIC. Not exactly the same amounts. It might be higher, it might be lower. It depends on the physical state that you live in. And so you got to look into that. But it also provides a lot more asset protection than money in a bank. So if you get sued, money in the bank is in most states is pretty much right there and ready for the creditors. But in life insurance, it really depends on the state again. But in Florida and many other states, it's 100% protected against creditors.
Wow.
And there's that aspect. Now, if you go back and look at the history, so the reason FDIC is here is because up until early 1900s, If you remember the movie It's a Wonderful Life that comes out every Christmas, right?
Oh, yeah.
George Bailey is the owner. He inherited his dad's bank. And back then, only business owners had money in the bank. And the reason is because families didn't want to have our money in the bank, but yet we had to open and close the cash register and didn't want to leave the money there, so you would just hold it there overnight. And so George Bailey is losing the bank because a bank run's happening, which was constant up until the early 1900s when FDIC came out. And FDIC simply is the government's promise to print enough money to pay us off if there's a bank run that happens. Like, there's no money in FDIC. Yeah. Okay, there's 8% of what's necessary. There wasn't enough to cover Silicon Valley Bank, by the way. I mean, the entire thing, one bank. So they just promise that they'll print it if we need it. But that has done an amazing thing. It got into trouble in 2008, and so President Obama just doubled it from 125 to 250, and everybody got happy because no one questioned whether the money was actually there or where it was going to come from. Yeah, it has thankfully strengthened the feeling, the concept, the belief that there's money to back us up if banks fail. The insurance companies have had a 200 plus year track record of never losing a penny every year in a row since early 1800s. And so not only do they promise you'll never lose any money, they promise they'll pay the death benefit, they also promise that your money goes up guaranteed minimum amount each year. Wow. So it's a lot better rating, a lot stronger than banks, yet that FDIC thing has been a great sales pitch.
Yeah, I'm sure it has. Yeah, it's a fantastic distinction around the perception of safety that drives so much of our decisions. So when you look at, as we're coming to the end of our time, I appreciate your wisdom so much. Who is the right person to talk with you? So our audience is pretty large. It's around the world, which is amazing. But who's the right person to reach out to you that's hearing this conversation that says, I want to know more?
Yeah, so I have a team of 4 people now, and the reason is because I want to be able to help everyone. Like, our commitment at Paradigm Life, the larger company, not my company, but the larger company in Salt Lake City, Utah that I partner with, we have about 15 people like myself, and our commitment is to help anyone who wants to better the lives of their family, whether that's term insurance or a small infinite banking policy, or they just want help with like setting up wills and living trusts. So anything that we can do to help your family be in a better financial and stability position, we will do. And I have people on my team that are a year or 2 into this, and they're absolutely happy to spend as much time as is necessary to help you put $50 a month to best possible work, right? So we will work with everyone. I personally get up every day super excited to help business owners and people interested in betting on themselves like real estate investors to be able to do that, because I think I can help you propagate that a few generations and set up my grandkids for an America that they're going to want to participate in.
I love that. That's incredible. So Gary, how does somebody reach out? Please don't give a cell phone number. No. But how does somebody get connected to you, get connected to your organization, connect with one of your team members? How do they do that?
Yeah, so I run my own podcast called Gary's Gulch, Gulch. That is a throwback to Ayn Rand and the book Atlas Shrugged. There was a guy named John Galt there, and he had a secret place called Galt's Gulch, where people who were interested in not taking from others and no entitlements, but rather running their own business and helping the community. If you've watched that movie, it's awesome, or read the book, that's the genesis of my weirdly named Gary's Gulch podcast. But even easier than that is just my name, Gary Pinkerton. So Gary at GaryPinkerton.com. You'll find me there, and plenty of ways to catch me.
I love it. Brother, thank you for sharing. Thank you for all of the insight and the wisdom and the way that you articulated it. As Aaron would say, the way you dumbed it down. It just means you understand it well, and I appreciate that a lot. And it gives us some tangible things to consider, because what we're wanting to do is be good stewards of what we have, right? We're betting ourselves, we're growing, we're leading, we're doing these things, but we want to make wise decisions. We're living a life of purpose. That's what this podcast is all about. We want to continue to set up the next generation really well. So thank you for your time.
Perfect fit for my world. So I'll help you and your listeners any way I possibly can. Much gratitude. Thank you. Praying for this podcast to continue growing, man.
Thank you, brother. I appreciate that a lot. Thank you, everybody, for joining us today on Market Mavericks. See you soon.